Greetings, traders. It's Wednesday, July 28th, 2021. Stick around. I've got two trades for you today because we're looking at a strangle, which we know can rub some people the wrong way with that infinite loss potential, right? So we're going to look at an IRA-friendly alternative. But let's take a look quickly. XOP has a liquidity rank of 3 out of 4. We're going to be in the weeklies, which is going to hurt that liquidity. Got to keep it real, people, right? And we're looking at an IV rank of 36. So we're asking XOP to stay in a range. We're asking its IV, if it can, to go down a little bit. Let's see what happens. Join me, shall we? Hi, everybody. My name is Neil. This is Option Theory. Thank you so much for joining us. I really do appreciate that you watch these videos, especially when you watch them to the end. That does help me so much. All right, on screen, you can see we're inside of thinkorswim's simulated trading, so we can get all the learning without all the risk. Yes, none of the profits, but hey, when you're ready to risk your real dollars to get the real profits, or the real losses, right? You'll know what to expect. So join us if you would, please. All right. Now, on screen, we have a small portfolio. We have, a lot of winners that have been managed, so you're left with mostly losers, right? So I'm not hiding anything. There you go. Make fun of me if you want. Those are my numbers. Keeping it real, people. All right. Let's go ahead and go to the charts. Pull up XOP. We can see XOP, right, is an ETF there that tracks the oil and gas exploration, and where this is the range, our break evens for today's strangle. We're saying please stay within those ranges and we'll make a profit. All right, now let's go over to the Analyze tab and build out that trade. We're looking at selling in the September 3rd weeklies with 37 days to expiration. We're going to be selling the roughly 16 delta. It's a 15 delta put here. So I'm going to click on the bid for the 70 strike. I'm going to scroll down to the call side. Find the 95. I'm going to hold down the control key and select the bid for the 95. And you can see one of the problems with this weeklies right here is, look, there's no open interest in this 95. And hey, I've been filled on trades I wouldn't think I'd be filled on when it has like low liquidity. So yeah, wide bid ask and no open interest. Not in love with that, but it is what it is, people. All right. So let's right-click this trade. You see we're going to get about $2 in credit for this one, so that sets our break-even in a nice place. Before we actually right-click this trade, let's take a look at our risk profile and see that we've got our break-evens set to expiration here. That gives us a 74% probability of profit, and just as proof, I'm going to take this trade here, and I'm going to 70 and then 95. Looking at an 86 probability, P50 probability on this one. So it means that there's an 86% chance that you'll be able to walk away with $100 and, close that trade out in the next 37 days. So good stuff. Let's go back to thinkorswim. Let's right-click this trade. You're not going to see this, so let me switch this camera here. And we're looking at the $204 of possible profit and an infinite maximum possible loss. I mean, you could lose everything and then some, right? That's scary. I totally get that. You can't put this on an IRA account. So we're going to leave it set to margin. Going to go ahead and hit send. There it is. That's in my working orders. Let's switch over to the IRA. And let's build out a Jade lizard. So we don't have to worry about the upside. And it's a trade that you can do. So let's turn this camera back on so we're back and it's bigger. Yay. All right. Let's go ahead and instead of selling the 70, we're going to sell the 75 put. That's a 26 delta, right? And then we're going to go ahead in the call side. We're going to sell the 90 as usual. And, well, not as usual. We were at the 95 before. And then we're going to buy the 92. So instead of it being unlimited risk to the upside, we have a $2 wide call vertical, short call vertical, and we're collecting $2.49. So that means there's no risk to the upside. Let's visualize that, shall we? Let's go to the risk profile to visualize that. And now let's set our slices to break even at expiration. And you'll see here that we're looking at a 75% probability of profit on this one as well. A little bit higher probability because we only have one break even, right? Our break even now is at 72.53-ish, 50-ish, right? 51, I believe. And yeah, we could, if it ends up in our sweet spot, we could make $249. And if it ends up blowing through the upside, we have no risk and we can actually still make $49. So that isn't what an IRA a friendly alternative. I'm going to right-click this trade, choose confirm and send. Allow you to see that we no longer have a infinite maximum loss. We just have the what happens if XOP goes out of business, right? And there we are, $7,200. Call it, let's round up, $7,300 of risk. All right, going to go ahead and leave that in the IRA and hit send, and let's compare those two strategies. All right, everybody, that's our show for today. Thank you so much for joining us. I hope you found today's trade examples to be useful for you. They come from Tasty Trade, except for that Jade Lizard part. And hopefully you'll stick around and join us by hitting that subscribe button and ringing the bell. And if you want to get those trades sent to you from Tasty Trade, down below in the description, you'll find a link to go sign up for Tasty Trade's Cherry Bomb email list. Yeah, and that's that. Big thumbs up to you. If you feel I've earned one, there is a thumbs up. You can always thumbs up me in a different way by subscribing if you haven't already. I do know most of my views come from those that are non-subscribers. All right. I'll see you tomorrow, everybody. Until then, may the market be with you.